It's completely insane. Like, how is it that we can't figure out a fucking way to sell tokens to people and not have it just blow up immediately?
The idea that you just like write 3 random words under every tweet and hope that that works is kind of wild, right? Like, I don't know how anyone thought that was a good strategy.
No,
do a test transaction.
Kain's
Just moving $20 million, no test, just boom, boom, boom. You got some balls, dude.
Hey everyone, I'm Kain Warwick and welcome to Uneasy Money, because what happens on chain never stays on chain. I'm here with my co-host Taylor, security at MetaMask, and Luca, the CEO of Pudgy Penguins. One quick thing before we start: nothing you hear on Uneasy Money is financial advice. We're just 3 builders talking about what's happening on chain, and we want you to always do your own research before aping in. You can find all our disclosures at unchainedcrypto.com/uneasymoney. Before we begin, here's a word from our sponsors.
The Energy Network is an intelligent, decentralized grid that coordinates smart devices to balance supply and demand. Energy Dollar is the native token of the network from one of Europe's fastest-growing energy startups. Follow at Fuse Energy on X to find out more. Multichain Advisors is an emerging technology growth firm that has helped create $50+ billion in enterprise value for 80+ clients over the past 4 years. They're the partner to help navigate markets. Build real traction today at multichainadv.com.
Hey guys, all right. Let's see. If I had told you in 2017 that the price of Bitcoin would be linked deeply to the future of Greenland, I don't know if you would have believed me. But that's the world we live in right now. It's pretty wild. I'm sure there's a Greenland token that's even more intrinsically linked to the fate of Greenland, but for now it's just BTC price action. PA has just been wild the last even the last 8 hours. It was like back up to 90, down to 87, back up to 90. I don't know what is going on. We can't figure it out.
Keep selling, guys.
Dude, it feels like whoever, because we still haven't figured out who blew up. Somebody definitely blew up on 1010. Feels like whoever blew up is not done trying to recoup their losses. I don't know. I saw that scam wick a couple days ago and I was like, yeah, I had PTSD. I was like, no, please out.
What if it was the president of Greenland that blew up on 1010? And that would actually check out. All right. So our first topic today, outside of Greenland, is the Trove token. This is a very interesting situation. I think it was quite interesting for me because the Trove ICO was going on at the same time that Infinex was doing the Sonar sale. So it was quite funny to look at the different take on Trove on the timeline. It was super positive on Trove. Trove was amazing. Future of France, the most egalitarian thing we'd ever seen. And Infinex was a giant scam. And here we are. I guess, the Infinex token hasn't launched yet, so maybe it'll also go down 98% in the first 15 minutes, but, who knows? So Trove Markets, they raised $11.5 million in a public token sale. There was originally supposed to be a deployment on Hyperliquid, and Trove was or is, I guess, or I'm not 100% sure where they're at now, but they're basically RWA. Market for Pokemon cards and things like that. I actually had one of our investors shill this to me, and I had a look at it. And there's quite a few projects that are in the space, right? That are doing Pokemon cards, doing rare assets, baseball cards, etc. That you can open up a pack of cards or open open a some kind of loot box and cards come out. We need to do that for the Pudgy Penguin cards. Luca. I don't know. Maybe you're already planning that. I don't know.
We're coming. Once Tay gets her box, we'll just do it right here.
I'm so excited.
We'll give it to an audience member.
I've ripped 55 boxes with my kids now. We bought 60 boxes. We're down to the last 5 boxes. We need 2 epic foils to complete our foil set, and we are starting to lose hope. I'm not gonna lie. It's pretty crazy. My son, like, every morning wakes up, he's like, you can see he's just got like this 1,000-yard stare where he's like, should we open another box? And then we open a box and it's like, just, we never get these cards. It's crazy. Anyway, so Trove is like, we're gonna create a perpetual futures market tied to collectibles, CS2 skins, a bunch of things, and they did their ICO, they did the token sale, and it was oversubscribed. And then they like didn't refund people or didn't fully refund people. I still haven't been able to get to the bottom of exactly how this worked. I saw someone write up like a long thing of like why they didn't refund, but it seems like they refunded some, but not all. They basically kept the money.
Mm-hmm.
And right before the TG, they said we're pivoting to Solana. So that was also a little weird. And then I think the ICO launched like well under the original price. The TG launched at like under the ICO price and then went down to like 1 million FDV. So I don't even know how that's like, it seems weird. Like that's like worse than a meme coin. So the whole thing is pretty wild. Apparently the other component to this is this is just like in the last few hours, I've seen posts about this. They had a huge campaign where they're paying KOLs to tweet positive things about them. And one of the KOLs said, you know, I went through this whole process. I wrote up a big thing about it. And, you know, at the bottom, I want to disclose like this is a paid promotion. And their manager, because KOLs have managers now, was like, no, the project says no to that. And then they were like, well, I'm not doing it then. And so they like refunded the money, the whole thing. Anyway, then the thing blew up. So, yeah, it's pretty wild.
Well, and so many of the KOLs are coming out and being like, "Sorries." Yeah. And then also there's like, you know, there's always the flood of people who like have that like unanswered DM and they're like, oh shoot, I missed out.
Yeah. Yeah. So I think, look, you know, the interesting thing to me about this whole thing, right, is like we did this before twice. We did ICOs, then we did IDOs, and now we're running back ICOs, and we still cannot fucking get this right. Like,
it's insane.
It's insane. It's completely insane. Like, how is it that we can't figure out a fucking way to sell tokens to people and not have it just blow up immediately? I don't get it.
I've got a lot here.
Let's go. I need some takes.
I think
A negative, positive. I need something.
Well, I also dodged a bullet, so we'll get into that in a sec. But
Okay.
I think the first one is, you know, if you take a company public, you go to JP Morgan, Morgan Stanley, Goldman Sachs, and they do all the bullshit and they make sure everything's set up and they take their fee and the thing launches. If you're a token founder, right? There's no JP Morgan or Goldman Sachs. You either have the right investors or the right people in your corner telling you how to do it, or you don't. And if you don't, you get smoked every time, like 99.999% of the times. Like there's maybe one outlier to the rule. And that seems like a problem worth solving, I would think. Something that I've been thinking about. I know other people have been thinking about, but it seems like a pretty big problem. So that's one. I think the other one is I love the product idea, right? Like the idea, I think, has huge potential for PMF. You know, I'm somebody who rips tons of Pudgy Penguin cards, but also all the basketball cards and all the, you know, this physical collectible market is a huge one, $500 billion, growing like 4 or 5% year over year. And they have huge liquidity issues. It's a very archaic system. Part of the reason it being archaic is what makes it fun. But, you know, obviously I think there's some innovation to come there. So I love the idea. The guy actually reached out to me and I wanted to help. Like, it seemed like pretty kosher. You wanted to do a Pudgy Penguin collectible perp, like take one of our rare collectibles, add some perps. I was like, all game. The guy that I was talking to was actually not any of the guys that I knew were getting a lot of shit on X. This guy seemed really smart, really kind. He ended up being like, I was like, hey, let's do something. We ended up never doing anything. And then the launch went to shit. So like, thank God, because I would have been fucking rooted into that. But it's a good idea, right? Like, and it had some promise. I mean, the idea that obviously accrued huge value. I think where this went wrong is like, at least the conversation I had with the guy that I was interfacing with didn't seem ill-intentioned. And obviously they have some version of a working product live. Like, it's not a complete sham, right? Like, there is, again, I don't know how hard it is. It seems like we're putting perps on everything. So like maybe like Hyperliquid or something has made it really easy. Again, I'm not sad.
So like, it is hard. And if someone tells you they're going to perpify something that's like completely illiquid, the person is most likely retarded.
Okay.
That's like the starting point. Like, dig into, like, ask some questions, then like see what you get back from them. Because if they're like, hey, we're going to like, create perps on like the art market or something, right? It's like, yeah, okay. What's your oracle? Like, how are you doing this? Like, really, there are so many challenges with making perps on illiquid assets. It's just not an easy thing, especially illiquid fragmented assets, right? Because then it's like, okay, if we make a perp on Pudgy Penguins, right? Is it the floor price? Okay, fine. Like, that's fairly liquid. Like that, on like, this is the NFT, right? Like, NFT floor price, perp, cool. Like, there's enough movement, but I promise you, there is not enough liquidity for people to not get their fucking faces ripped off on that all day long. Because, like, I could go right now and put a couple hundred ETH into the floor price of Pudgies and probably raise the floor price by like, I don't know, 20%, 25%, right? There's no one with standing orders that's going to sell into me. Like, there's a few, but like not enough, right? Like, no one's like, the floor price is actually 7 ETH, and therefore if you try and push it above 7 ETH, I'm just going to infinite sell into that, right? Because they kind of can't. So there's a very challenging problem in taking an illiquid asset and making a perp. Like, it's just going to get manipulated, unfortunately.
Yeah, it seems like those oracles are so easy to manipulate too. Like, little prices is
Totally.
Yeah, that makes sense. Well, thankfully I dodged a bullet.
You did.
Yeah, you did.
Yeah, and honestly, Kain, you made me just realize I probably should think a little smarter technically. I was like, oh, you guys figured it out, so let's throw these fucking cold pounds on there. That was a little naive, and so I'm glad I didn't have to fucking deal with that.
Yeah,
I'm glad I didn't have to deal.
But look, my hot take on that is like, a lot of these problems are not intractable, right? Like, they're hard problems, they're not intractable, and you can kind of iterate your way towards like some kind of solution to them. So I think like the base case of not rejecting everything out of hand is actually fine. Like, I think you don't want to turn into one of those people that's like so cynical that like nothing can work and everything that someone pitches you, like, that won't work. I've seen that before. Like, I hate those fucking guys. Like, get out of the space. Like, go do something else. We're not done innovating here.
I don't know. I have a couple red flags that I'm just like, you know what? We're just not even gonna waste time investigating. All right. And it served me well over a decade, okay? So maybe you guys should listen to me once in a while. First thing is, whatever the hype thing is, so right now it's perps, like, you have to put it in like the negative bucket land, and then they have to work their way out of that just by like riding the coattails on perps. And then this pattern where they do like the most popular hype thing, but with another like cool thing that feels more genuine. Like, I've seen it so many different times. And so that's what stands out to me about this. Or is like, this just seems like if you kind of zoom out and you're like, I want to scam a bunch of people with money. What is
match these two narratives together?
Yes, exactly. Right. And so that one served me pretty well. I mean, I've also missed out on stuff, so let's be realistic about How are my success rates on this?
You haven't lost money, but you haven't made money either. So this is my point, right? It's like it's better to get scammed every once in a while. Miss out on like 1,000x.
So yeah, and then the other thing I think is just, I think it's just really genuinely hard to like unpack the intentions of people these days, because just like the conversation is all over the place. The sort of like the trust indicators, the things that you have are all manipulated as hack. You also don't necessarily like want to operate solely on like super great trust indicators. Like a project without any sort of like attention and hype is not going to be great either.
Yeah.
But I do think that like, I don't know, it's gonna be. I think it's gonna be hard to like really get to a like a perfect position. But I think that we can at least get to a position where we don't like throw a huge amount of money at someone who then immediately like screws it up, right? Like,
Yeah.
This is the problem though, in like, you know, this kind of oversubscribed meta as well, right? Like, remember, Mega ETH had 1.2 billion in bids, right? Like, and you know, Mega ETH is very trusted, like been in the space for a long time, like, you know, good people, but it is possible to create enough FOMO that people will put 1.2 billion into a contract. Now, there was also like sonar guardrails around that as well, right? Like, but you know, like that's a lot of money in a pot for someone to be like, "Ooh, actually, maybe I changed my mind and the price is really 10 billion. So thank you." And then they just like go waltz up into the sunset. They've got your money at that point. What do you do, right? So I think like, you know, we tried so many different ways to like stop ICOs from becoming super extractive. And like CT is obviously retarded because literally like you know, you can't trust KOLs, right? Like they're being paid to say things. So you have KOLs who, you know, and there's some that are, you know, transparent about this, but like on balance, you really can't trust them, right? Like if that is the only indicator, especially I mean, talking about like red flags, right? Tay, like one of the things, if 95% of the KOLs are in agreement about something and there's like no dissent,
yeah,
that is a crazy paid campaign that is being run on you right now, where people are throwing money. And, you know, let's say you throw $1 million out at like the top 50 KOLs, right? Pay them 50K each or something like that to you know, tweet positive things for a week, build up a ton of hype, and then you raise $10 million. Like, that's very positive PB for the person raising the money, right? Like, so yeah.
Right.
Yeah. And I think the other thing that we don't touch on as much is like some of this is like the new generation's like rejection of VCs and like anything that's even slightly professional-ish. Like this, for me, like I still don't understand the KOL situation. Like I don't understand how people are operating off of that. Like I see it and I'm just like, why would you listen to this person? They're literally being paid. Like,
yeah, the anti-VC meta I do get, right? Because let's not forget, there's a long period of time of like low float, high FTV. You know, everyone bought the token at 1 cent, and you're buying it at like $2, right? And they're just gonna like dump into you forever, right? And so people, you know, people look for some alternative to that. They go to meme coins, right? Or they go to this thing, or like they, you know, they do perps or whatever, right? Like the job of most people in crypto is trying to make money. They're trying to like, you know, they're trying to find a way to turn $10 into $1,000 or $100 into $1 million or whatever their target is. And if they see one game that is stacked against them, they will try another game. And, you know, sometimes the game is stacked against you in a way where like you can see what the rake is, right? Like VCs are like, we are going to take 50% of all of the value that is created in this place, right? And people go, oof, 50%, that feels
bad, right? And then they're like, let's go to meme coins. And it's like, the meme coin guy's like, we're going to take 99.9% of the value that is created in this place. And it's like, you can still make money, but you have to be 1 in 1,000, person, right? And then, it all gets kind of...
But that feels better for some reason, right? That feels like, because it's partially just the rejection of the VCs rather than like a return to first principles and being like, actually, what does success look like? How should I gauge this, etc.?
It's funny. Like I was big into Echo early on, right? Like I had an Echo group. I was in a bunch of Echo groups. I was in like those early rounds, Mega ETH, like going back to like early 2024, right? Like two years ago now. And like Echo genuinely felt like it was starting to solve some of the problems. You had at least alignment between like the group lead. It was kind of an ICO. It wasn't exactly an ICO because it was early stage. There was no liquidity, but it was like, we can replace VCs with this approach. We can raise $2, $3, $4, $5 million. And even that got like very quickly turned into farming. Probably the biggest group, I won't name it, but there was one particular group that did hundreds of deals with like a 10 to 20% carry, raised, I don't even know, like maybe like $500 million or something. Like it would be some crazy amount of money, with a like 10, 15, 20% carry on average. So, like it might be 20 mil or something like that. I don't know exactly how much it was, but like it could be 20 or 30 mil of free rolls into all these deals. And, a lot of the deals were not amazing. And that became the most popular group because it had the most deals. They always sold out. It had the most people in it. And it was like, this is adverse selection to a massive extent, right? Like, but even then there were groups that you couldn't get into. People wanted to do Echo. And so they were like, well, I can't get into, Guy from Athena's group that does like one deal every 3 months or something like that. So I'm going to go into this group, and this group is going to be, my ticket out. And, even talking to Kobe, he's like, the idea that somehow from a project perspective as well, that 200 degens would be better than your classical angel investors or like Hasib is ludicrous. And we've now tested this. We have empirical data. It is not better. It is definitely not better, right? So it's a challenging problem. Like even when you have a system, which I would have and did argue, like in Echo, that was one of the most well thought out schemes from like an incentive and mechanism design perspective, and it still has the ability to kind of unravel to some extent. It's pretty wild.
Yeah, because there's so much money on the table.
There's so much money. There's so much money. You're gonna get adverse selection. You're gonna get perverse incentives. People will find a way. They'll find the bug. They'll find the bug in the thing, and they'll find the edge case that you didn't think through. And unless you're
they'll like run it, like they don't just like look at it. They will like
so quickly. I know. Yeah.
That's actually like a good transition to this next one, though.
It is. So I don't know. I can intro the InfoFi stuff, or one of you guys can take it. Up to you.
Luca, do you want to say something?
Yeah, I it goes back to my point though. It's like I think the people don't know what they want outside of them wanting to make money. Just to like the spiral point, it goes down to, like I said earlier with Trove, it's like, yeah, the VCs like can help you do it to make the launch way better. I promise you, if those Trove guys had like a good person on the cap table that was aligned in a meaningful way, the launch with that launch specifically, and Kain, you probably attest to this, like that was a breakdown of like, you didn't know what you were doing. That was simple through and through, right? Like that wasn't, you either scammed or you were completely oblivious and hadn't done it before and had nobody in your corner who had done it before. And that was a complete no, right? Like it was like all the things that you just have to like, you underwrite if somebody good was in your corner, right? With the incentives,
They gave like
20% of the tokens to DWF or something like that, right? To market make or like something ridiculous. Like that's the only way that can even happen, right? Like they gave like 20, 30, 40% of the supply to some crazy market maker who just dumped into the chart. That's the only way that you can have a 98% down candle in the first hour is if there was like 10 times more float than was expected, just dumping with impunity.
Dumping. Yeah, which is insane. Like,
which is insane. But to your point, Luca, like no one would advise you to do that. You can only do that if you had no idea what you're doing or if you're scamming. And like, you know, I don't know the answer, but like, you know, the result speaks for itself. The outcome speaks for itself.
Yeah.
All right. So speaking of making money in crypto, one of the ways that people tried to make money in crypto over the last year was InfoFi. And the interesting thing about InfoFi in terms of, you know, people running things, right? And people seeing a gap and you know, running towards it, right? Was that InfoFi really required no capital. You could almost convert like pure time and energy and effort into money. And so, you know, there was a category of people that was extremely attracted to this. And, you know, this is not the first time we've had this. Airdrop farmers, you know, saying GM in a Discord or whatever, similar vibes, right? So this was an extension in my mind of like the airdrop meta, you know, trying to maximize attention on the timeline. But this week, or last week, I guess, sorry, X nuked InfoFi. Just like
completely
lost the entire thing. Like, just like nothing will ever grow there for like 10,000 years. Like, just absolutely wiped it off the face of the planet. And, you know, like, whether you agree or disagree with InfoFi or you think it was a good idea or whatever, there is something, in my mind at least, about the fact that X is aware enough of this thing going on to actually go and nuke it that feels so bullish for X right now. Like they are actually tapped into what's happening on their platform. You know, one of the biggest criticisms of Twitter, the OG Twitter, right, was none of the fucking people who were running Twitter used it. They were not users of the platform. Like, and they actively talked about that, right? They're like, yeah, like they never tweeted, they never did anything. They had no idea what it was like to be on Twitter. And you know, Elon came in and was like, I know Twitter.
Like, I use Twitter a lot.
I use Twitter. I love Twitter, right? And so the fact that you've got people who actually know what's going on to sufficiently in like this niche category, right? Like Twitter is a big place. Like crypto is a smaller place. InfoFi is an even smaller place within crypto Twitter. And the fact that they were paying attention enough to like go and nuke this thing is pretty wild. And feels pretty bullish. So I think it also speaks to like they are paying more attention to crypto than they are maybe giving off right now. So yeah, InfoFi is over. It had a good bad run. I don't know.
I did take it. What's that chart look like?
Yeah, they didn't take it amazingly well. I think, you know, interestingly, Kaito, whether they saw this coming or Kaito was one of the first ones to it. They saw the perverse incentives. They saw what happened when they opened it up to like an infinite number of bots, and they were already in this process of curating it. I don't know what happens to Kaito from here, to be totally honest, because like, I mean, just even this one stat, right? The Yapper community, which was like like an X community. So this is like a place where there's like a kind of its own timeline of people tweeting. 157,000 accounts in there, which it would have been like a billion accounts if the bots weren't constantly getting nuked, right? But 150,000, I guess, accounts that had escaped the bot purging, all just the whole community got nuked.
which is pretty wild as well. So yeah, like I don't know how InfoFi recovers from this, because like the primary vector in my mind was on X, and if you can't access X, then I think it's over. But yeah,
I genuinely don't know what you do from here. Like, as if you believe in this idea that people should be able to yap and make money and whatever, I don't know what you do from here. I would recommend figuring out a different thing to do, but that's just me. I think fundamentally, and I've had this belief for so long, like I don't think that, like, so many people say, like, you add money or you add a cost to something and that'll solve the problem, and it always does the opposite. And this is like early internet days when email spam was a thing. They're like, let's charge people for email. The result of that is not that the scammers stop paying for email. The result is that every single legitimate person doesn't pay, and only the people that know they're going to have ROI, which are the spammers and the scammers, pay. Yeah. It's always like this, and I don't know why we have to keep relearning that, like, the money just kind of screws things up, but we do.
We always think there's a chance. We're always like, this time it might work.
But it
made it AOL marketing, basically, you know? It was...
Yeah.
But, you know, so the interesting thing is, right, like, there was a period of time where you had this organic, somewhat transparent, you could see which projects these KOLs were grinding on, right? Like, the leaderboards were public, you could see everything. Kaito gets nuked, basically. 20 minutes later, you have this backroom Trove deal where, like, you know, no one knows what's going on. It's like direct payments. There's no transparency at all. So, like, there's an argument to be made that, like, it's only going to get worse when, the KOLs now have got a taste of blood, right? They're not going to stop trying to get money for yapping about things.
Yeah. And I don't necessarily, like, expect that to change that much, but for me it was the replies. So, like, oh my god, it was like, if I got tagged in a certain thing, because luckily the bots were not latched onto me, but, like, if Zach
must be
oh my god, if someone tagged me and Zach in a tweet, or if Zach tagged me in a tweet, or every time or the MetaMask account, like the primary MetaMask account, it was like, my feed would be destroyed by just, like, it's not even slop. It's just, like, words. These, like, blank words. And it sucks because it makes it really hard to engage, like, on a genuine level, which is what I want to do, right? Like, I want to have conversations with people on Twitter. I want people to read my stuff, and I want to reply to them. I want to learn about cool things. And when you add this layer of incentives and you add money to it, and then you have all these people running around yapping, like, it's really scary.
It's noise. Yeah. It's just noise. And, like, OG reply guys, and I was a reply guy back in the day, right? Like, you know, the goal was to say something useful.
Yes.
The idea that you just, like, write 3 random words under every tweet and hope that works is kind of wild, right? Like, I don't know how anyone thought that was a good strategy.
I mean, that's what I mean. Guys, come on, stop it. Stop incentivizing people to be butts on the internet, okay? Thank you.
All right. Before we continue, here is a word from our sponsors that make the show possible.
The world is about to see one of the largest infrastructure shifts of the century. New technologies are using more energy than ever before, but our legacy grids can't supply the demand, and we are barreling towards a global bottleneck. So Fuse is rebuilding it. The energy network is an intelligent, decentralized grid that coordinates smart devices to balance supply and demand. The network harmonizes existing infrastructure, increases grid capacity, and unlocks low-cost, clean energy. Energy dollar is the native token of the network. The more electricity the world needs, the higher the demand for the energy network. The value of energy dollars may fluctuate. From one of Europe's fastest-growing energy startups. Follow at Fuse Energy on X to find out more. Multi-Chain Advisors is an emerging technology growth firm that has helped create over $50 billion in enterprise value for more than 80 clients, like Pith, MoonPay Commerce, and Wormhole. They've worked with some of the largest and most impactful companies in the space. They're the partner you want when you're navigating markets and trying to break out from the noise. They help navigate TGEs, go-to-market, BD, and partnerships, capital markets advisory, PR, media placements, KOL activations, and more, driving execution from launch to scale. Their results are measurable. To learn more and start building real traction today, visit multichainadv.com.
Okay. Farcaster hands off the keys. So Farcaster is going to be taken over by Naynar. I hope that's how you pronounce it. At first I read that as Neymar and I was like football players taking over Farcaster. That they're trying to get into, I don't know. So according to Dan Romero, the deal transfers protocol, contracts, code repos, the app, dev tools, and Clanker, which is their AI launchpad, to Naynar. So I don't know what Naynar is.
That's my question. That was my question. What is Naynar?
I don't know.
Infra, it's like one of the infra builder tools for Farcaster. So it's just like,
okay. So it's like an internal transfer.
it's like, I could give you the NFT comparison. It's like other side buying immutable or,
oh, okay.
It's like one of those, or improbable buying other side. It'd be that equivalent.
Okay. Like
The thing that helps power it is now absorbing it.
is now absorbing it. I feel like we've seen this before with chains, but
Yeah.
yeah, it's interesting with an app.
Mhm.
So Farcaster raised 150 mil in 2024 from Paradigm and Andreessen. And I love to make fun of Andreessen for putting money into dumb things, but this is not one of them in my mind, right? Like the idea that we could rebuild social was like a 1 in 50 shot. And I wouldn't even say that you declare defeat here and never try this again, right? Like I think there is something to be said for continuing to try to build new social networks with different incentive structures. Like there is no way in the world that the existing social networks that we have today will be the one that are dominant in like 10-20 years, just like from an AI perspective, right? Like we're going to go through some kind of singularity and things are going to change. So having like different incentives, trying different things, it makes total sense. The 150 mil is probably like a bit large in fairness, right? But it's Andreessen, like they got to throw 50 mil at something. And I'm sure Paradigm and Andreessen were fighting over it, and whoever threw the biggest check in won. So yeah, like it feels...
and if you make progress in this area, right? Like if you it's worth doing, and it's actually definitely more worth doing like 150 mil into like a Farcaster, like good team. They're gonna freaking
100%.
They
throw everything at
that
and
rather than doing like this like light social, 5 mil here, 5 mil there. Like if you're gonna do it, you have to go.
You're not gonna beat social with like 10 mil.
No.
You're not going to invent a new social network with $10 million, in fairness, right? Like, not today. And people get anchored to like, oh my God, 150 mil round, right? Like the Mag 7, like the scale that they're operating on, it's 2026. Like 150 mil for a startup is actually not that wild. It's kind of what you need in order to like redo some huge thing. It's the equivalent of like 10 mil in the early teenage years of this century, or like honestly like 2 mil in like the early 2000s, right? Like just the scale of what things cost and inflation, et cetera, is go crazy. So I think my hot take is that I think we learned a lot about what worked, what didn't work. Anyone who is trying to build a new social network is going to have a lot of data to mine from Farcaster. So yeah, I think it's a bit unfortunate, but it was always, and this is venture, right? Like venture is like a 1 in 100 shot, 1 in 50 shot, right? For something to work. So yeah, it feels like it's fine.
I mean, I don't think that's gonna make or break Paradigm or Andreessen. I think they're gonna be okay, guys.
They're gonna be okay. They're gonna be.
I'm more focused on like the team and like I don't know, like what did we learn? What did crypto learn? What did what's the big takeaways on that front? The investors are gonna be fine. It was a valid bet. They went hard. There's like 5 years or something. So they really tried. I mean, for me, it's just this takeaway that it's not. So 2 things. One is it is really hard. It's really hard to overcome the network effects. Yeah. Like it is really hard. And then 2, I think that like anytime your social is even potentially creating an echo chamber, it's like a non-starter.
Yeah.
And crypto is sort of similar in the sense like the apps and the products that sort of unlock more things and allow people to do more things tend to be just like infinitely more valuable than the things that like do one little itty bitty thing, right? And I've watched this. I've watched this a few cycles now, because everything moves so fast and people innovate so quickly, and it's very hard to keep up. If you're trying to like chase the current meta, like it's very, very hard to keep up. So I think
I think there is this like there's an interesting thing in like the early whatever 2000s, right? Like 2007 to like 2012 or something like that, right? You had all of these apps, like once the App Store came out, you had these breakout apps that were able to like achieve virality, right? Because all of a sudden you had this platform where you could write an app and release it and it had massive distribution. I do think that we are in a place where something like a Farcaster built by like, 2 people using AI or whatever, instead of like 150 mil from Andreessen, has the potential to go viral and actually build up some traction, not as a one shot, right? But as like there are 1,000 2-3 person teams that are trying this, and one of those things will take off, right? Like lowering the barriers to entry is the most efficient way to get better innovation, right? If it costs $150 million every single time we try to reinvent social, we're going to do it like 3 times and be like, we don't have any more money left, right? Maybe not Andreessen, but like, they're probably not going to put 150 mil into a social network next week, right? But if for $200, 3 people in a garage can like cook a new social network and just like release it, through some distribution platform, and the costs of building an app go down to like $100, we're going to see some wild shit, is my prediction. And like I think that's the biggest takeaway for me, with like the cost of engineering collapsing to almost zero, especially for proof of concept. Like, okay, fine, like whoever builds that thing, if they get to 10,000 users, you're gonna have
to rebuild the whole thing.
You're gonna have to rebuild the whole thing. But you know what? Rebuilding things completely is actually fine these days. Yeah. You can just rebuild stuff from scratch and it's fine. So yeah, I think we still have some work to do on social, and I think that we're gonna see more people try and kind of innovate here. Yeah, like micro social networks.
It has to be just like actually different. Because the second you're trying to compete with Twitter, then it's like, oh, you're Twitter for this niche audience.
Niche thing, yeah, exactly.
And then it's like, again, you're going back to, you're going to create this echo chamber. You're always competing. The network effects are always going to be working against you.
I mean, you guys have this on Abstract, right? Like you guys have this nascent social layer, right? Like what's your takeaway?
I have a culminating thought here. My culminating thought is, I think one of the greatest things about tokenization is the ability to take intangible things and make them tangible. And if you assess the opportunity there, what is one of the most valuable intangible things that, if tangible, could be an absolutely huge market? My answer is influence. Influence is derived from a social network. And so I very much think this is a $1 trillion swing. Whoever does figure it out, I think is going to have one of the biggest businesses in crypto. if you were to tell me, Instagram was built on Python, if Instagram had a token and Python had a token, which one would be more valuable? I think Instagram 100 times out of 100.
Yeah.
And I think there's something really big here that only crypto can enable. And so like to the point on the abstract side, one little thing that we implemented and like Stake ended up copying us, obviously because they have such a huge distribution layer, but like being able to tip somebody seamlessly on stream and that money goes directly to them, right? Was like pretty an interesting little use case. Had never been done before, but it like felt really good, right? This idea that I can just have a wallet, I see a streamer, and instead of sending them a gift that goes through TikTok and they take their fees and there's a payout of like 7 to 14 days, the idea that I can seamlessly transact. And that was like what might feel like a menial feature, it probably is, but like has probably huge ramifications for, how
This is like the entire fucking point of crypto.
Yeah.
Dude. Like be able to peer-to-peer electronic cash.
Yep.
Like
Yeah.
you should be able to pay someone that you see online directly without it going through like 15 middlemen. The fact that you guys invented that tech for this
Is absurd.
like, is it 2026 or I guess you did it like a year ago or whatever, but like, how did it take us that long? Like,
Because everyone wants their cut.
you still can't even, like, the thing that we've been looking at Infinex is like, how do we send people money to their X account?
Yeah.
Right? Like, I can't just send you money. Like, I see a good tweet, like I should be able to send you money, right? Like, now, talking about monetization and whatever.
I wanted to do, you'll appreciate this. But because you can kind of like index on session keys, what I wanted to do is I wanted the actual social feed. Saigar ended up nuking it. But I wanted there to be like, because right now, if you upvote something on the portal, it's a transaction. So I was like, what if every like you gave them a penny, right? Or like every like is like 5 cents. And so like, you can do that, like no pop-ups, no anything, like click like, 5 cents inside the wallet, 5 cents inside your wallet. There's actually like social on crypto rails, there will be a monster company.
I agree. It's just, we need,
but you need a beast. And the crazy part, and like why it was, A16Z, like you can underwrite Dan and then that thesis and that potential, like that's I've seen A16Z blow a lot more money, a lot more dumber things. Like that was a worthwhile swing.
100% agree. Yeah. Agree. And again, like a lot of empirical data. Like we saw what didn't work about that. Like, Infinex did a ton of stuff on Farcaster in the early days. And one of the best things about Farcaster is that you had a very, very efficient filter for more technical people, right?
Yeah.
Like the people who were on Farcaster were not the like dregs of humanity that you would get on X. And so you filtered out a lot of that. Like, and it did shift over time and there were people who kind of came in, but like people were mainly there for the tech, which was amazing because you had this audience of like people who were in it for the tech that you could, speak to very quickly and tap into. But, there's a bunch of other stuff, right? Like you get one thing right out of 10 things and you need it to be 9 out of 10 and it just doesn't work. It's a hard game.
Yeah. And by the way, we loved it too. Like we absolutely loved it because we have the primary MetaMask account, which is like massive and like it's right. And then we have a whole bunch of other MetaMask accounts that are for like actually having conversations with people, like actually engaging on a deeper level. And then we all have our personal accounts as well. But yeah, early days, not even early days, years of Farcaster, it was like we can operate as the primary brand, we can represent, but we can actually connect on the deeper level with people that are actually like our users. And like both our lovers and our haters, right? But on like this deeper level, like when we
like lower noise, like
people would their
signal. Yeah, agreed.
Because if you you can go look, like if MetaMask posts something on Twitter, you're gonna have tasty slop replies, that are just like
50. No, like 5,000, right?
Like completely meaningless. You're gonna have like 20 fake support bots, and then you're gonna have like 10 or so like people that are just like violently angry at you for no reason whatsoever, and then like 2 that are like, we love you, one token, and then zero. Today, there are literally zero people that are engaging, like, actually with the content.
With the tech. Like, oh, like this is...
Yeah, or
like how are you thinking about this thing? There's no conversation.
It used to be even...
I know,
like,
it used to be... Yeah, I know.
People would comment on the actual thing. You could engage. You could get feedback. Also, it also used to be that, like, people would come to the most recent tweet and be like, my stuff's broken, help me. Yeah. That's gone too. The only people that do that are the bots that reply to themselves.
Yeah. Look, but if it costs you 5 cents to reply, I bet you all that stuff would disappear tomorrow.
I don't know. I don't know though, because like that's the problem. Like that's what Tay was saying with email, right? Like, you know, there was a thing where people were like, "Oh, let's charge people to email," right? And it creates this very perverse incentive where a person who has no financial incentive to like something or a tweet or write a post will stop writing posts if it costs them money, right? Like we forget sometimes in crypto that like most people are not willing to spend, like, I mean, this is like even something with like vibe coding, right? Like, you know, the cost of running a machine overnight is like, you know, maybe 20, 30, 40, 50 bucks. 50 bucks a day is a lot of money for people, for most people, right? Like if you're just churning through $50 to $100 a day in like credit in tokens, right? Through Anthropic's API, most people can't sustain that. Mm-hmm. It's like a job, right? So, you know, we do forget sometimes that like charging people to do things, you filter out a huge group of people. Now, maybe that's okay sometimes. But scammers are going to pay 5 cents if the ROI is 6 cents. Scammers are going to pay 5 cents if the ROI is 5.000000001 cent. You can call the EV, like just fucking pay the money, do the thing. And the challenge, right? Is like they do that. They do the more they do. That's their job. Their job is do the math, right? And like that's literally their job.
Wait, hold on. I want to skip forward because this is quite relevant. Okay, so there's like this news that came out that was like Ethereum activity is spiking, blah blah blah, and then and then this other guy came out and was like, it's actually all the address poisoners. And then I got a little heated with him because I didn't like his takes. But basically, for those that don't know, address poisoning is those spam transactions that you get on chain. And so they show up like sometimes they'll show up in your wallet, they'll show up in Etherscan. If you send a transaction, you'll get like bombarded by like incoming or outgoing transactions that have like lookalike addresses. The reason they do this is because they're hoping that you will copy, like you sent to your friend or you sent to your other address or whatever it is. And they're hoping the next time you go to send, you'll accidentally copy the wrong address and then send your money to the address poisoner, the scammer. This is like, it goes on for years. It's been on BSC and Tron and ETH. There's even some ones on Bitcoin, which to me makes no sense because Bitcoin's like UTXO and you use new addresses all the time, but like they do exist. I've seen them. And they have like really interesting mechanisms and ways that they evolve both to make sure that they get into UIs because so many UIs are trying to block them. But also they're very willing to spend money. So there's like these one guys that were doing calculations based on the balance, based on the
they made what 50 mil? Looks like the biggest one, 50 mil, right? Yeah. So how like you can spend 50 mil worth of transactions is
a lot of transactions.
A lot of future transactions. That's pretty crazy. I'll use else, but we actually, and it wasn't that much. It was a meaningful amount, but it wasn't like that much. But we got hit by a super pro. A super pro. We ended up tracking him. The guy ended up making like $200 million on people. Wow. But it was actually a venture investor who was investing in us who sent the money to us. He ended up just like, you know, insurance, taking the L and then sending us and actually funding. He lost like $1 million. Basically a pro got in between. It was like a middleman and but it was really sophisticated.
Yeah. Dude, it's wild.
That's why never do test transactions. I tweeted this the other day. Never do test transactions. You're gonna do test transactions.
Just moving $8 million, no test, just boom, boom, boom. Got some balls, dude.
That's how you burn $10 million of the die as well, right? So just,
Technically, it's true because the second you do the test transaction, you will get more by like 30.
That's what they're targeting.
Okay.
They're targeting the test transaction.
So now that's how you lose your money too, though, just in a different way. The solution is use an address book, label your addresses, get an ENS name.
Yeah.
Like, do that. And never copy from your transaction history. Like, MetaMask, we don't show you your transaction history like that, so it's not even an issue.
Yeah. Do not use that as just don't.
Like,
if you're gonna do it, if you're gonna do a transaction and you're gonna do a test transaction, put the address that you're testing into a place that you trust on your machine or whatever, like a scratch pad or something, like an iOS node or whatever. Copy that, do the test transaction. If the counterparty confirms that they have the funds, and that is an important step, not just that they saw it on a block explorer, but that they actually confirm it, then go back and copy it and do the same.
From the same place. From the same place.
Not from MetaMask, not from Ethoscan, not from SolScan or whatever. Like, go back to your scratch pad, same address. Yes, exactly. Yeah.
But yeah, so I just found it when I was investigating these, the ones that really threw me for a loop was I was like moving some big money around. They were sending me $10 USDT.
Totally. Yeah.
I was like, yo, there's no way this is profitable.
It's crazy. I know, right? It's profitable.
Well, turns out it's profitable. And so when that was really a wake up moment for me because I was like, if they're willing to spend $10 to send a transaction.
They were getting filtered out, right? Like the filter was like sub $1, and then they went over $1, and then I think Ethoscan started filtering out like low value transactions and starting to like triangulate it and
exactly.
So they're like, $10 per transaction, but also it has to be based on the address value, etc.
Yeah.
Or like they're obviously thinking this but it goes back to the point. They're doing the numbers.
They're doing
the numbers, and they're going, okay, this address has $50,000 in it. Sending them $10. If there's a 1 in 1,000 chance that they make a mistake and send me the $50,000, it's worth it.
Yeah, it's wild numbers, and like ever since then, when I think about payments for social or payments for anything, right? These micro payments, I always just go back to that, and I think that ultimately, my conclusion is that you cannot successfully block out like threat actors, scammers, spammers, whatever. You just can't with financial stuff. There has to be other stuff. And the second you do try to block out them with financial means, you actually just destroy every legitimate user because there's no legitimate user on earth who's just going to send $10 randomly around because there's no reason to, right? The only ones that do that are the spammers. Yeah. And so then you've just built a platform for spammers. And so then the question obviously is like, okay, so then how the hell
But this is also I would argue a function of like transparent ledgers, right? Yeah. If someone can see you doing a test transaction, especially like
from your
let's say you do, let's say your safe has $100,000 in it, right? And you have 10 different assets that are all $10,000 or whatever, right? And you go, okay, USDT, $1 transaction, classic test transaction, $1 USDT transaction. The follow-up's probably going to be 9,999, right? And they can see that. So, one of the things is like not having a transparent ledger, using some kind of zero knowledge moon math tech so that they can't see you do the transaction. Right. Yeah. You do the test transaction and anyway.
Well, I also hold on.
Okay.
If you're using an interface, Kain, I don't know what wallet you're using, but like when you're using one, if it's showing you, if it shows you, like if you send a big transaction out or a little one or whatever with a balance, and you're seeing the spam transactions, and especially if then there's a little copy button, then like. That interface is basically is like giving free real estate to scammers. And there's a ton of ways that you can like change things without playing whack-a-mole. Etherscan, the block explorers are in a bit of a different position because like their whole job is to show the
They
whole
have to do everything. Exactly. They can't start filtering stuff out without it getting bad.
Yeah. But for a wallet, do users want to see every single transaction that comes in their wallet? No. Do they want to see every single scam token? No.
Oh, there's a funny story about this. When we built Infinex, the way that we built it, it was retarded. And we ended up in a situation where we know about deposits, but we can't actually filter them. And so we don't have like proper deposit detection where we show you the deposit. So we just don't show it to you. So you actually can't do this inside of Infinex because we don't have the technology to show deposits into your wallet.
No, I mean, that's, by the way, that's MetaMask as well, is like, we show you the activity from your internal state logs, but we don't, we never scaled up the infrastructure to show everyone's transaction history all the time for every token on all the chains.
It would be impossible. It would be impossible.
And as a result, we have like literally zero address poisoning victims ever. It's fantastic.
Yeah, I know, right? It's so it turned out, where do we land? Is Ethereum, is it all spam? Like, are we within a
Dude, finger to blow the bottom line.
Yeah, okay. All right.
I mean, I don't know.
So from chains with too much activity to chains with no activity, Cosmos is losing builders. Cosmos, to me, feels like it's in the horrible, uncanny valley, trough of despair of being like just real enough, but not used enough that like it's hated by everyone. Like XRP, it's like it doesn't do anything. Like it's like it does things now, right? But like realistically, no one uses it, no one cares. It's a meme, right? The chain is a meme. There are many chains where it doesn't matter whether, like Cardano, it doesn't matter whether it does anything. Like Japanese grandmothers are still buying it for reasons, right? Because the chain's a meme. Cosmos is in this weird position where like it is actually usable. You can do stuff with it. You can build, these sub chains on Cosmos, and yet it's like it just doesn't work. It's just like
they just never. I don't know. They just never
on chain on AVAX
figured it out.
Yeah. It's and so people are like, okay, I mean, we saw this with DYDX, right? Like that to me 2 years ago, whenever it was like the nail in the coffin, right? Of like, okay, DYDX went there and it just like activity fell off a cliff. And that was coming from Starknet, which is already grim in terms of like, how do you get to it? And like, the bridging and stuff like that, especially back in the day. Now it's a lot better, but like back in the day, it was really hard to get onto Starknet, right? I mean, even like Starkware, right? Like the original version, like bridging was hard. It was super clunky, needed a different wallet, etc. And then DYDX went to Cosmos and it got way worse. It was crazy. So yeah, I think, it seems like the incentive is for a lot of these builders who are building subnets to now build EVM L1s or L2s. And, this has been, I think, something that has been going on for a while. But just, like the EVM interop and all of the tooling and like infrastructure that you have access to, it's just so hard to kind of like build a chain somewhere else. It feels like a massive uphill battle. Even when you're doing ZK stuff, like, there's obviously challenges with ZK Sync that you guys have dealt with. I'm sure, Luca, but like you still get so much of the EVM.
Yeah, it's sort of like
right? Like it's hard EVM, but it's still EVM. So you get a bunch of things, right? Like,
look, I'm stoked we picked the ZK stack though, because I think that's where it's now clearly like has its own little bullish thing. It's like I am stoked we picked it. We did have some troubles, right? Like there was a couple things. It's almost like 1-to-1 though. It wasn't like EVM equivalent at one point. Like when we first did it, it was like a huge pain in the ass.
Yeah.
Now it's like they're on par, and now they're actually like they've gone from like behind in terms of like usability to like on par, and now obviously because it's on the ZK stack, there's a slew of things that we can do that others can't. So I'm actually pretty stoked. I'm really glad we made that decision in hindsight. For the longest, I thought that we made a mistake because there was, more resources, more money, more integrations with other people.
Friction and like you're segmented and fragmented and all that stuff. Yeah.
But I still feel like Cosmos is so much worse in terms of segmentation. Like it's just like a whole different mental model, whole different culture. The DAV is all different. And I don't know, it's just, the tech is good though. Like the
tech is good. It's funny. I remember Tarun said to me like 4 or 5 years ago, he's like, the best chain is near. He's like, best chain, best tech. And like the more I've looked into the near ecosystem, the more I'm like, actually, I think like he was right. Like it is the best tech, but it's so hard to be your own virtual machine living on an island and trying to attract people there. It's like really, really hard.
And at this point, I think before we were like spin up these L2s and these L1s to spin them up, and like the tech arguments held like some amount of water. At this point, I think we're probably past that stage. Like the applications, the existing user base, the existing infrastructure, the switching costs, like all of that adds up. I do not want another freaking wallet. I have so many wallets. I've played with so many chains. I don't want to keep track of another address. I don't want to remember another block explorer. And ultimately, I think increasingly so, people are just like if you're this little app on this random chain, you
actually new wallet
do work.
A new wallet, like, and even like for us, we've integrated a bunch of different chains. We've integrated SVM, EVM, a bunch of L2s. We got stuck on the ZK Sync stuff, and we haven't circled. Like, we got to a point where we're like, this is really hard. We didn't do it, and then now it would be easy, but we haven't circled back around to it. But we've done like SWI, we've done some random chains. We need to circle back to abstract. It's high on my list.
All right, guys, I got to jump. I'm sorry.
Okay, cool. All right, easy. I think you want to go one more topic. We'll see you next week. But yeah, so the last one is Paradex. So Paradex rolled back their chain. I get a chain, app chain, app something. Their app chain. I mean, this is another one of those ones where like very obviously beneficial for the majority of users, I think, right? It was like so bad and so painful for almost everyone involved, right? That it's really hard to sell like, code is law on this one, right? Like, it was I
don't know what people were expecting.
I don't know if database migrations ever fit into the code is law like belief, but I think once it's a database, you kind of go, if you need a database and you fuck up your database migration, then that's probably rollbackable, I guess.
And by the way, they didn't just like the impact was that somehow the database migration resulted in Bitcoin going to zero.
It's wild. I know.
Which is like, I thought, 10 was bad, but some of the ones went to zero. But Bitcoin didn't go to zero.
Bitcoin held held above 0, thankfully.
So I don't know.
So it feels okay. It feels like it, better to. There was a period of time, I think, where if you did any kind of rollback, even if it was net beneficial to most of the participants, right, that people would be like, this is now a scam and I'll never use it again, right?
Yeah.
I think the meta has shifted a little bit to the point where it's like, if a mistake is made, even by the team, that impacts everyone and they don't attempt to fix it, then I will never use this thing again.
Yeah. And
that's real. It's the big shift.
And the thing is that, so I always just go back to this, like, if you can't, like, Bitcoin can't roll back. Like, it's just not a thing that can happen, right? But if you can, and you choose not to, and you do all these mental gymnastics to, like, basically morally justify you not taking an obviously good action, I'm sorry, like, you're avoidant, you're not good at building, you're not good at shipping, you're never going to deliver value to people, because, like, it's just such a unique case. And I think that anyone that, again, assuming that you can, right? Assuming that there's like a case where you can do something that, like, fixes it, and choosing not to, and especially choosing not to for philosophical reasons, like code is law, it's like the biggest red flag for me today. The biggest.
There was a
like,
period of
so
time where, like,
people-
the consensus was code is law,
Yes.
and if you do something like this, most of us believed it, right? But the funniest part about it, I think it's worth unpicking this as like a final point, right? It was like, philosophically, code is law. Pragmatically, I would prefer code to not be law because I need to build stuff. And so I kind of need some like proxy contracts and like non-immutable stuff in there. Maybe throw a database in, whatever. Like, that's pragmatically what I need to build, but it's not what I believe. It's how I live, but what I believe is this other magical system over here. And so when anything went wrong, it was like, no, the magical system is what rules us, not the actual reality on the ground.
But again, that's avoidant, and you're just basically like,
it was a fun way of living for a period of time that we all.
I still stand by the fact that, like, people who actually go hard and get it right and ship stuff that's like immutable or nearly immutable and actually decentralized, like, that's the biggest green flag for me. But the reality is like 99% of the stuff is somewhere between a vibe coded database and like a multi-sig. And in all of those cases, there's going to be opportunities to fix things, and if you can, you should. There's like there's a few situations where like it gets kind of gray because the impact, you can end up having like adverse impact or unintended consequences on other things with the action. That's like, those are interesting conversations to have, and like, where are your values and stuff. But it's so rare, honestly. It's so like, it's usually like, do you want to help the people or not? And there are a huge amount of people who go, we can totally fix this, and it has like very little risk to basically anyone, and we're not going to. And I just say, I just look at you and I'm sorry, like, you're never going to build and ship anything of value if you're that disconnected from like your people and your product.
Yeah, the actual reality on the ground. I think, like, there was a period of time where tooling was so bad, and I think it's gotten a little bit better, but there are some like very fundamental challenges, right? Like, if you are going to build, and Uniswap's a great example of this, right? You need V1, V2, V3, V4. Every single time it's a new factory contract that is immutable, there's still fucking liquidity. I found liquidity in a Uniswap V1 pool the other day.
Yeah.
I was playing around with something. I had a wallet and I was like, oh, that's weird. Because there were no LP tokens back then, right? Like, it's just a magical position in the contract, right?
Yeah, and it doesn't show up anywhere.
It doesn't show up anywhere. And I was like, that's a weird transaction. What was that about? And then like I still had value in there. So there's like that's really hard. Like you still
fragment. It's still there, by the way. Like, it never
still there. But that's the nice thing is like, it is immutable. It didn't get hacked, so it's still there. So that's good, right? But every single time you have a new version, which in fairness for Uniswap's like every 2 years, you need to drag liquidity across. It's like it's an attack vector for your competitors to try and like drive a wedge. Like, it is challenging. We don't have good automated systems. It'd be amazing if like there was a really easy way to go, okay, everyone like opt in to like migrating and move to V4 and we'll make it super easy for you, but we've never really built that technology. So
I don't know.
And most of the time, I would recommend teams avoid it because it adds just another layer of complexity. And like, we just haven't gotten to the point where like Uniswap is a really rare case where they build things in a way and then they go to town on like the security of it from day one and then forever after, and then they ship it. Most things don't, and as we've seen in the last like 6 months, we've had a lot of old things get hacked.
Yeah, it's crazy.
A lot of them, and a lot of them were sort of assumed to be secure and probably like were secure.
Multiple audits, like, yeah, they were secure at some point because they had, in some cases, billions of dollars. Like, most of the time, they've got a long tail. Like, there is this decay function where, like, it goes from $1 billion of TVL to 100 million to 10 million to 1 million. Then it's like, 1 million, the long tail of things isn't worth going after. And it's like, well, no, it wasn't. But
it wasn't, but now it is. Yeah. And there's been a lot of them. And then, I think just like the security posture and like knowledge has improved on like the auditing and the builder side, but also there's just this thing, I think, I don't know if it's AI specifically that's helping out, but I think the tooling and like the tooling and the knowledge and maybe the AI, they're able to like hold things in their head and put together much more complex like attack flows that probably with like way less effort.
Yeah. No, it's actually crazy. Like you could like one of the things that I do. So you can build sub agents, right? That are like fine tuned on the training. They cut out a lot of context and they just are like, and you can tell them like, you are like an autistic code auditor. Your only job is to audit code, and it won't get distracted with anything. It'll just go in and like understand like the like fine details of things. And
it's like, wild.
It's wild. It is wild. All right. We'll wrap it up there. That's it for this episode of Uneasy Money. Thank you for tuning in. If you like the episode, follow us on the Unchained feed on X. We haven't been kicked off there yet, thankfully. YouTube or wherever you get your podcasts, and we'll see you next week.
Awesome. Bye, guys.
See ya.